We're really fortunate to have our guests with us today, Rita, the Greater Washington, D.C. Market President for Bank of America, Kouhestani, Senior Vice President of Leasing and Asset Management for Brookfield Properties, Stephanie Smith, Senior Public Policy Manager for Uber Technologies, and our moderator today is Evan Kraus from APCO Worldwide. Just really quickly, Evan's President, Managing Director of Operations and Managing Director for Washington at APCO. He served as a senior strategic counselor for many of the world's largest businesses and also founded APCO's globally integrated digital practice. So I want to thank you all very much for taking time to be with us this morning. I know how busy everyone is. For everyone, just so you know, if you have any questions during the discussion, please use the Q&A box at the bottom of your screen. We will record this session and share it on our website by the end of the week. And with that, now I'm going to turn it over to Evan, who's going to share a couple brief remarks to set the stage, and then introduce our guests and begin our conversation. So with that, Evan.
Great. Thank you, Jack, for the kind introduction. I'm really pleased to be here. APCO is a consulting firm that is the largest. We're headquartered in Washington, the only big global firm headquartered here. And although we have about 800 people around the world, and we counsel a lot of businesses and are very proud to call Washington our home. And we're the biggest agency here, and so we're feel a very strong sense of responsibility to the region. So I'm particularly happy to be sharing thoughts with you today and to welcome my panelists who are really accomplished in their own right. And so just to introduce them quickly, Rita, as you heard, is the DC Market President for Bank of America, obviously one of the most significant financial services institutions in the region. Larry's background also includes politics. Theme for Washington. He did a stint as chief spokesman for the Department of Defense and worked on the Hill for K. Bailey Hutchinson, and before that at a think tank in Washington called Heritage, which many of you I'm sure have heard of. Stephanie is with obviously the public policy manager at Uber, as you've heard, and works across Florida, Carolina, and this region, and has also been a member of the board of directors for Career Source Florida, which is a workforce policy board, so we'll be able to give us some thoughts about workforce and returning to work, as well as comments about mobility and all of that. Stephanie also, as her title suggests, has a public affairs background, working at AT&T for about 5 years and for Governor Charlie Crist for that. So we're happy to have them. And then finally, Cy is obviously Senior Vice President at Brookfield, where he's been for almost 8 years. For those that don't know Brookfield, it's an incredibly important and powerful commercial real estate company with about $35 billion under assets, and operates sort of across the world and includes facilities in multifamily, residential, retail, hospitality, and logistics. And so I will be able to give us a lot of great insights about about the economic recovery as it pertains to getting back to work, which I know is on everybody's minds. So to kick things off, I thought I might share some research that we have done recently. Hopefully everybody can see my screen. Can I just get an acknowledgement from someone that the screen's good? You good? Great, thank you, Larry. So we have a research division called Insight, and we've been doing polling week by week here about American attitudes around the pandemic and how people are feeling, and thought it might be useful to share about 3 minutes of top line from some of the recent research we've done. If you're interested in learning more, there's a COVID repository on our website at apcoworldwide.com where you can dig into all of this data at your leisure. I just wanted to share, we did some crosstabs for the DC area, and so we're going to share some overall data about American attitudes, but also with a special focus on how the DC and the DMV area in particular look relative to that global data. And so the research is focused, as you see here, on different aspects of American life, economic and employment concerns, which are certainly top of mind on this webinar, but also changing social norms and the things of the like. And each research was a statistically projectable sample of 1,000 Americans, and then a subsample of people that lived in Virginia, Maryland. So just a few points of reference for us to talk about our conversation today. Excuse me, my head. How prepared do you think the following are to respond to coronavirus As you can see, there are high expectations of employers and also high expectations of the local government, particularly in the DMV area. I think it speaks to the strength of the Council of Governments and the Board of Trade and Connected DMV that folks across the DMV have even higher expectations of government and business interests to engineer the recovery and to respond to coronavirus relative to those across the U.S., which bodes well to our panel today and the one that the Board of Trade hosted with governments yesterday. Secondly, and interestingly, and we'll see this sort of play out in the data also, DMVers are somewhat less concerned that they'll lose their jobs because of the crisis and have more confidence in their employer's ability to weather the economic downturn, by a pretty significant margin, particularly on the concern about job security. That's a very significant differential between 30%, 29%, and 46%. And the confidence is about a 10-point gap, as you'll see. Priorities for industries that should benefit from government support. We're doing a lot of tracking around the world on stimulus funding and how it's playing out, both for governments, clients, and for corporate clients around the world. And so this is something we track very, very closely, and attitudes about it. And it's interesting, no surprises here. It's interesting to look at the gaps between the US sample as a whole and the DMV on where government support should go. Less on telecommunications, for example, and a little bit more in things like hotels and tourism, personal services, restaurants, coffee shops, and about equal amounts on healthcare. And Larry will be happy to see a little bit more on banks and financial services here. And then that's it for the opinion research data. And then just to sort of cross tab that against and check it against the economic data, and Larry will give us a lot more here in his remarks, I'm sure. But the latest tracking by the Fuller Institute, which is probably, that's at George Mason, they tracked the DMV economy probably more closely than anybody. They're now projecting a small contraction. About a month ago, they were projecting a small amount of growth, but 0.8% is much, much less in terms of 2020 economic contraction in the region than the almost 6% forecasted across the US by the IMF. And so, as you can see in the graph on the right, the Washington region is being forecasted to decline less and to recover faster than the rest of the country. Everything is out the window, as you'll see in the last bullet, if there's an extended lockdown or a second wave, or if the second wave creates an economic impact, if there is going to be one. So these are numbers that might be subject to change, but as we're looking at it now, we're looking at something that's a little bit better, which sort of speaks to the stronger confidence of the consumers in this area. The pandemic, however, will exacerbate the economic inequality we already suffer in this region. Brookings has revealed that about 37% of the regional workforce is low-wage workers. It's almost 1 million workers in the DMV. And so they're much more likely to be frontline employees whose jobs are more at risk. And 11% of regional workers are in the specific industries that are likely to be most impacted by the pandemic. And there's some of the industries that you saw on the slide around who deserves government support. So, we are looking at some impacts here, and although those impacts are likely to be less muted than in other places. So just thought a few introductory remarks, sharing some data might be helpful to tip things off. And so we're gonna certainly start with some questions of our panelists that I'll use to prime the pump. If you have questions along the way, please send them in and share them on the Q&A in the chat, and we will get to them with as much time as we have. I'm going to start, since we just went through the economic data, maybe Larry, with a question for you. And from your perch, data that you're looking at, how do you see the contraction and the recovery taking shape across the region? Is there any differences from the data I shared that you'd like to highlight and that you think is useful for the listeners to hear?
Yeah, thanks, Evan, and thanks first to Jack and team for pulling this together. I hope it's a worthwhile conversation, and Evan, great to see that data and excellent research, and look forward to a good discussion. I'd say, one of the ways that we evaluate sort of where we are in the cycle right now is just by looking at our own consumer spending data that we can see through Bank of America customers using their credit and debit cards and checking accounts and everything else. And what we see is, on a month-to-month compared year-over-year basis, say in January it was up 7 or 8%. I actually think it was a little closer to 9% year-over-year in January, then 8% year-over-year in February, 7% in March. So we were seeing actually continued yearly increases on a month-by-month basis in consumer spending on debit, credit, et cetera, for us. And then obviously down precipitously in April, 25, 30%. In May, a month to date, we're seeing it down only about 5 to 10%. So in other words, it was actually up month to month, January, February, March, year over year, down in April by a lot, and now down in May, but by a lot less than it was down in April. So what does that mean? I mean, first of all, I think what we're seeing is the effects of the liquidity that all the programs that are out there, the unemployment insurance, the economic impact payments that the federal government established, the paycheck protection loans, those are starting to bite, if you will, starting to be seen in the market, and consumer spending is reflecting some of that. It's also obviously somewhat of a reflection of the return to work, the reopening, however you want to characterize it, that's happening. Obviously across the DMV, we're seeing that with Mayor Bowser, the governors starting to relax some of the conditions, which obviously we're going to talk about and which you alluded to. But so I think what we see is, a consumer, which drives the U.S. economy, more than 2/3 of the U.S. economy is consumer spending, and this is also reflected in our region, is to some extent recovering a little bit. It's shifting the type of, obviously travel and restaurants is not what it used to be, but we're seeing online retail and all the things that you would imagine relatively healthy, quote unquote, compared with what we saw just last month. So some of that emergency funding and the support to individuals, the support to businesses, and then coupled with the gradual reopening that's taking place, we are starting to see something of a stabilization, and if not recovery, because we're still going to see negative growth rates for a while. And I think all the blue chip consensus economists agree that while the worst will be in this quarter, it'll still take time to kind of recover and perhaps still see negative growth through the end of the year. But generally speaking, the combination of the consumer getting healthy again through all the programs, gradual reopening, you're starting to see the consumer spend, and that drives everything in our economy, so to speak. So that's just some quick thoughts on that, Evan.
So thanks, Larry. That's really helpful and encouraging, actually, to get some good news. So, beyond those hopeful signs, what should we be looking out for? Just a quick follow-up around signs of caution. Are there things that you have your eye on, or your team has their eye on, to look at things that might be setting us back, or might bend the curve in the wrong direction in terms of the recovery? And what should we be aware of?
Yeah, I mean, I think it's the things that all the elected officials are thinking about too, which is, where are we in the, everybody is trying to establish the phases. This is first and foremost a healthcare crisis, and what are the phases of that crisis? And we've seen all the expertise, the CDC and the World Health Organization and others talk about where we are and in what phase, and it has to do with the testing and the case rates and whether or not we've mounted the curve and are bending it down. But obviously, everybody's going to be highly focused on, as the reopening starts to pick up a little bit, what kind of a potential resurgence there may be. To some degree, that's anticipated. It's built into the models for local elected officials to evaluate. If you're going to a little bit and now have better testing, will you see a little bit of a return to higher case rates and things like that? And that's going to be the determination. Obviously, the whole idea so that the hospital system and the medical system can manage it, but not eliminate it. And obviously, it's going to be finding that right balance and making sure that as we reopen, whatever that looks like for individual companies and for individual entities, what does that reopening look like? And what we're certainly doing at Bank of America is going to take all the precautions and probably more or less manage through a mode of operations that we've been in now for 12 weeks for quite some period of time, because you just want to make sure that you're still being able to conduct the level of operations you need to, but are keeping everybody safe and not doing anything to contribute to that greater demand on the healthcare system.
Thanks, Larry, for that. So, Si, maybe we'll go to you as a nice pivot. Looking beyond sort of the immediate impacts and towards some longer-term trends, I'm struck by Larry's comments about getting back to work and what all of that might mean and the precautions necessary. And you know, I think one question that's on everybody's mind is what are the long-term trends around commercial real estate and people working in offices? We see stories about everybody's going to work remotely or from home, the tech sector going to, you know, new hubs of remote workers and in more low-cost labor settings, or people moving out of big cities in terms of their workspaces. I'm curious of whether tenants are considering smaller spaces because they have less people coming into the office, or larger spaces to support social distancing and retrofitting of commercial spaces. So let me ask you maybe to opine a little bit on what you're seeing from the tenants across, you know, your different real estate dimensions, about what you think are going to be some of the near-term and long-term impacts on commercial real estate and how people might work based on the pandemic.
Sure. Thanks, Evan. And thank you to the Board of Trade for having me. To give everybody a sense of at least my sample size, Brookfield, what we own and operate in DC, includes about 40 office buildings, 8 million square feet. So that's kind of our window into this locally. And you know, it's hard to answer the question because it's really just a few spot anecdotes. What I can share is going into the pandemic, we had a fairly robust pipeline of leasing activity, leases where we had struck terms and we were negotiating a lease. 90% of those deals closed, so people still had the confidence to sign generally longer term commitments. But over that same period, 90% of activity, new activity, is down. So we're 10% of where we were typically when we're showing space and trading proposals. So everybody's paused, particularly small businesses. We've seen larger transactions, namely in the tech sector, move forward. I believe it was publicly announced, but one of the largest, Microsoft, is committing to 400,000 feet in Northern Virginia of expansion. And there are other deals like that that seem to be continuing to progress. So we've seen, you know, heads of some of those companies make really bold statements. On the ground, it's still early, but we haven't seen the corresponding pullback. So it's hard to answer now. I mean, I will say, I think it boils down to whether you envision 100% work from home day or week, or some hybrid. And from what we've seen, some early research that Gensler has put together, which is an architecture firm nationally, is that everybody likes the idea of some flexibility, some work from home. Few people like the idea of exclusive work from home. And the challenge that'll present to employers who are looking for efficiency is the kind of combative force to that is no one wants to share at this stage. So you could become more efficient if people are in and out of space and you're sharing your workplace, you're sharing your desk, et cetera. There's kind of a hoteling element. But if some people are in and out and you're not allowed to share, there's really no efficiencies gained. And what we've seen is most people do want to come back to the office, that when we go back to a mindset of really being on the offensive and not being on the defensive like many of us are now, and we're thinking about how to be creative and grow, that's best done in person. So it's early to say, but my expectation is we won't see a dramatic shift in the way that, that we're taking down office space.
That's really helpful. How about the retrofitting question? Are you seeing people going into, as now, especially today, when the announcement is that we're starting phase 1 of reopening across the DMV and in all 3 jurisdictions, are you hearing any rumblings of people going in and refitting their space? We've heard about plexiglass panels and one-way hallways and or are there, in your buildings, are you providing medical screenings or being asked to, or special cleaning services or things like that? What's different in terms of just the operation of these buildings and the fit outs that you're starting to see?
Yeah, the bar has definitely been raised. I mean, when I say that there won't be a dramatic change in the way that people take space, I do think there's a dramatic change in expectations for health and safety. And so the bar has just been raised in terms of what we are visibly doing to make people feel comfortable to return. So generally speaking, and this is consistent across, I think, the Reopen DC guidelines and generally what I'm hearing from others, but limiting elevator capacities, in some instances 2 people, in some instances up to 4. It really depends on the size of the cab. We are in our own office space creating kind of one-way corridors so people aren't passing each other, with lots of signage around that. We have hand sanitizing stations really all throughout the space. Our conference rooms are limited to less than 10 people with 6 foot of separation, so much reduced meeting space. So there are a number of measures that we're doing. We're not doing valet parking anymore because people don't feel comfortable with others getting into their car. So there's a lot that we're doing up front. We honestly don't know exactly how people are going to react once we do come back. But what we found in other markets that we're in, we're the biggest owner in downtown Houston, and Texas reopened really first. And we found that even with the reopening, only 10% of people were coming back to the office daily. So lower than what was allotted. And I think, what we would expect is the same type of dynamic in DC, that there'll almost be a self-regulation of social distancing, because most employers are going to be very flexible over the next several months. And there are probably going to be few people that actually opt to go into work.
Really helpful. And maybe, Steffi, is a good bridge to you. When we start talking about commuting and public transportation and mobility and trends, Uber has been at the center of those conversations for quite a while. And I'm particularly struck to learn from you the uptick of services like Uber Eats at the same time as the passenger, which I'm sure is way up at the same time as, there's been a huge decline in the passenger use of Uber. It would just be interesting for you, maybe, as we think about getting to the office and getting back to work and school and the commercial spending that Larry was talking about. What trends are you seeing now short term, and which do you think are going to stick long term in terms of the pandemic's impact on these mobility issues? So maybe you can share some thoughts on that.
Yeah. So first, on the first point that you made about Uber Eats, obviously, we've definitely seen an uptick in food delivery during the last, over the last few months. But I would say, that expansion has caused us to look at the way that we're, looking at running our business. We've now announced that we're going to get into the delivery of things, as well as delivery of groceries. And as folks look to platforms like ours for alternatives, we're hoping to meet them there. But unfortunately, the uptick in the Eats business has not offset the loss to our core rides business, which was down globally 80% at one point. And so, obviously, when cities move, we move, and when cities are closed, our business is impacted. And so, we do believe that our business will be back. I think there's been some skepticism about, folks using the services as cities, look to, especially your denser cities, as folks feel comfortable using rideshare. Even before the pandemic, we were also seeing an increase in usage in the suburbs. And so we think that trend will increase now, obviously, in this post-pandemic world. And so, And so, to your point on transit and commuting in general, I know we've talked a little bit about it here. I think there's a strong push to reshape the 9-to-5 commute. Whether it's working from home multiple days or weeks or full time, whatever that looks like. We do believe that that reduced demand will also, obviously, unfortunately, reduce ridership on transit and transit revenues. And so, we want to be able to help push that message that, obviously, if people abandon transit and find no other alternative, they're going to go to buying, more cars, the research has shown. And so, we think there should be some sort of strong combination of transit walking, biking, an occasional, Uber trip, that can keep vehicle ownership down. That's really where we're going to be pushing moving forward, and hoping to work with cities to enact policies to keep the, this whole basket of alternatives a viable option, and not just letting, free parking or free highways kind of rule the future. Hopefully that answered all of that was kind of all over.
No, it's helpful. I think it's helpful. It's just interesting to get your perspective from the bird's eye view of all of that. And I'm glad we don't have Volkswagen on the panel, their local headquarters. Larry, let me ask you a question that was I pulled from sort of size comments about the small business sector. I saw the news this morning, and I want to thank you and recognize Bank of America for this, that B of A delivered. I saw 315,000 PPP loans worth $26 billion to the small business sector. So I really appreciate you and your peers' support of that program and getting liquidity into the market to sustain us. How important was PPP for our area? And do you think, we heard a lot of news about it not getting far enough or being enough. Do you think it was here? And do you think the SME sector is going to be permanently damaged here, or do you think it will rebound as a function of that support and the economic recovery you're anticipating?
Yeah, thanks, Evan. The PPP obviously today is yesterday was the 2-month anniversary of the CARES Act. The CARES Act is the legislation that provided for paycheck protection and all the other things that all of us in Washington sort of follow more closely perhaps than the rest of the world. But 2 months, that legislation was passed 2 months ago. When that legislation passed, everybody that had supported the creation of the PPP, the Paycheck Protection Program, at that point they would have been bold enough to say that in 2 months we will have moved $500 billion in loans to 4.5 million small businesses, everybody would have said that would be an unbelievable objective, and if we can meet half that, we'd be lucky. Well, that's what the numbers are. The Small Business Administration, through the 5,000 plus financial institutions that have been providing the PPP loans, have moved $500 billion in loans to, and these are loans of average of just a little over $100,000. So they're the right loans. There's been a lot of discussion and coverage about the companies that shouldn't have maybe gotten PPP loans. It's all interesting. It's got to get sorted out. But the real fact, this program has probably exceeded everybody's expectations. It moved. Obviously, it ran out of money quickly. The Congress reappropriated additional money. There's still something on the order of $120 or $130 billion left in the program. So we're still getting. You mentioned our loan volumes. We've done now. It's about 320,000 small businesses. Our average loan amount is about $80,000. About 98% of these are for companies that have fewer than 100 employees. In the DMV, we're at probably about 16 or 18,000 small businesses that have gotten these loans for probably $1.5 billion or close to it, maybe a little shy of that dollars. So this has been a terrific program, and there's complexity around it like there is for any new program, but it got worked out. And I think we've seen some discussion in the Congress about extending the program. And providing for a longer period of time for small businesses to take advantage of the program, or perhaps changing a little bit of the use of the proceeds. That'll all get worked out by Congress, but I think we should all feel good that a lot of small businesses got funding that they really needed to be able to continue operating, and we'll see how it continues. It's, as I said, right here in the DMV, it's you think about 16 or 18,000 small businesses just for Bank of America, and as I said, there's 5,000 lenders participating in this program. So it's an important program that has done well, notwithstanding the challenges that we all are very aware of. And I think small businesses in this region, obviously, a lot of them are highly dependent on a broader level of economic activity. I don't think that's unique to our region, but this is a high growth region, or it had been until the crisis. There's no reason to assume it won't continue as a high growth region once we are able to work our way through this crisis, in which case small businesses will continue to be a healthy component of the economy in our region by all expectations. I mean, anybody who's ever started a small business, and I know there's a lot on this call that's what they're entrepreneurial and you start small businesses, there's a really high level of failure among small businesses in normal times. So it's always a courageous, and it's kind of the heart of the American economy, that small businesses are willing to start out and take all the risk that goes with that. There's a high failure rate even in normal times. So I think what the program was designed to do, which is to keep a lot of those risk takers operating, keep them paying their employees, has truly had an impact and will continue to. It's, as I mentioned in my economic data earlier, and some of it reflected in your data, we're only just now seeing a lot of that liquidity hit the market, it hit the economy, and hopefully that'll continue to sustain economic activity, employment, and all of those things. Again, if the consumer is healthy, the consumer drives more than 2/3 of the U.S. economy. And all the discussions we've had with Cy and Stephanie around consumer behavior and consumer activity, if consumers are healthy, then the U.S. economy will be healthy. And so the whole objective would be to make sure that we're creating an environment where the U.S. consumer can continue to do what it does so well, which is essentially drive the global economy.
So Stephanie, a follow-on question for you on this topic. A lot of the innovation that's been happening in the economy broadly over the last maybe 5, 10, 15 years has been around the sharing economy. Uber is a shining example of success in that area, but is by no means alone, and new business and disruptive business models that embrace sharing. So I'm interested in your perspective on sharing at a time when people are afraid to share,
Sure.
because they're afraid of transmitting a disease for which we do not yet have a cure or a vaccine. So what do you think is going to happen in the sharing economy? And are there steps that you and your peers in that part of the economy are taking to rebuild consumer trust so that they're willing to share again, or are things forever changed? It'd be great to hear your perspective.
That's a great question, and I appreciate it. I think it's critical, trust, earning that trust back, not only for riders, but for drivers and for couriers, as well. You may or may not have seen over the last few weeks, we've pushed kind of a unique campaign, a marketing campaign, asking folks to stop using our service, to not move unless it was for essential travel. And that was, again, I think, kind of a risky message for a company that literally depends on people moving, but it was the right thing to do. And at that time, making sure that the drivers and essential workers felt safe. I think you're going to see a shift in that messaging, not only from our company, but others like us that, rely on business travel, tourism, and other folks in the shared economy world of just moving towards safety, that messaging of what are we doing to ensure that this ride is going to be safe, requiring face masks, requiring certain cleaning measures are taken place. In our case, with Uber X and XL, lowering passenger limit, no one in the front seat. These types of measures, we've even announced using our technology, and you'll probably see other tech companies use this as well, as drivers literally have to take a selfie, showing that they have their mask on before they're able to start taking trips. So how can we leverage the power of the platform to make sure that folks are taking the right precautionary measures, and then messaging that out to riders so that they know as they are beginning to start moving, that is those measures are in place. Again, it's going to be a critical part for our business to be successful moving forward, is regaining that trust. So those are just a few.
That's helpful, Stephanie. Appreciate it. And then Cy, are you seeing any, as deals start to regenerate themselves, are you seeing the mix change? Or do you anticipate, maybe it's too early, but do you anticipate the way space is being designed and conceived in the future? Is it going to change if there are permanent changes to the small business sector, or if people tend to do more remote e-commerce kind of purchasing rather than storefront purchasing? And, are you starting to see any early signs of permanent changes to the retail sector, or the eating out sector, or the entertainment sector, or are people still looking to build out buildings the same way with kind of offices on top and storefronts on the bottom, and malls and mixed use? It'd be great to hear your perspective.
Yeah, well, I think a lot of us, and what we do as a team is we poll ourselves, because it's easy to say, well, I hear, or you can kind of prognosticate and remove yourself from from the sample. And we try to just say, well, what would we do? What would you do? And most people on our team, which spans all age groups from kind of 20s to 60s, everybody envisions ultimately going back to work and going back to the way that they shopped and dined. But they just have a very they have a higher expectation of the service that's provided and the visible measures that are taken. So I think some of the challenges of retail pre-existed this pandemic, and this pandemic has accelerated a lot of businesses decline that were already on the verge of bankruptcy, and just kind of brought them to that point faster. So some of the old models were dying anyways. I mean, department stores are a good example of just a business that's been disrupted that was kind of hurting to begin with. But experiential retail, delivering an experience that brings you outside of the home that you can't replicate when you're in your house, that's something that'll continue to do well. So our expectation is the experiences might look a little bit different. They might lay out a little bit differently, but if you deliver an experience that can't be replicated at the house, it will survive. I think in terms of office space, initial measures will be, the plexi guarding against kind of face-to-face cubes, that sort of thing. It'll be some of the protocol that I mentioned earlier. But I do think there'll probably be a bit of a shift to a little less open plan, a little less density than where we had been headed, because we were moving towards very open environments. Our office itself is 5'4" desks that are just stacked. And that sort of arrangement likely will change. And I'm not sure how much, but I suspect that, again, one of the reasons that I don't think total absorption of office space will change dramatically is if people are taking less in general, their layouts are going to require a little bit more than if you had a 5'4" desk as opposed to a 6 foot or a 7 foot desk. So I think that'll change. I think, in some respects, we have a sharing economy in the commercial world where we try to deliver services that are common to all tenants in a building. Amenity spaces, fitness centers, conference centers, lounges. And I see those as still being really important, that they're efficient, and you get more by having them shared than you otherwise would if you had them exclusive. And people value that. So we'll have to be really safe about how we reopen those, but we expect to continue to build them and operate them.
Great, that's really helpful and encouraging, I think, too. So let's do a little bit of lightning round here. And we're going to go Stephanie and then Cy. We'll go around the horn here. Let's start with the pace. Are we opening the region too fast, too slow, just right? If you had the pen, what would you change? Or do you feel like, how are we doing here? And what advice do you kind of have in terms of pace? Larry, why don't you go first?
Yeah, I think that the elected officials that have really thought about this, and they are all doing so well, are doing it at the right pace. And the question is, will the public accept that pace, whether they want to go fast or slow? But I think that I would say there's a general sense of caution that the leaders have established in the reopening, and that's the right thing to be doing. So I think it's the right pace.
Okay, Stephanie?
I agree. I think the pace seems right on. I would just add, making sure that the rules and regs are consistent and or very clear. Obviously, we're in a new world, and this is happening, very methodically. But there does tend to sometimes be some room for clarity when making sure that there's clarity as the phases kind of continue to go on.
Great, and Cy?
I agree. I think it's the right pace. We've seen restaurants in particular really struggling. And it's been bad enough for businesses like that, certain small businesses outside of restaurants or retail. Anything more would seemingly be catastrophic. And so I think the measures that have been taken have been very thoughtful. I think we've demonstrated that there's been a decline that provides a level of safety that didn't exist a few weeks ago. So I think it's been the right pace.
Okay, question 2 in our lightning round. So we have a number of participants from a range of organizations from the NGO community, mostly business representatives, some government folks attending on the call. And thank you all for your attendance today, and look forward to your questions as well. What advice do you have for the folks on the call on what they can do? What should we be advocating for? What should we be doing to stimulate the recovery and to get us back to some more the economic prosperity to which the region is accustomed? So Larry, what advice do you have for us?
Well, it's a hard, I mean, everybody's perspective comes from the vantage point that they have. And in our case, you know, to some extent we have the advantage, if you will, of never having closed. We're in an industry that is designated as critical, and we feel like we have a critical role to play and have been trying to play that. So our posture has been that we're operating at about an 80% work from home environment and still doing everything that we need to do. Here in the DMV, that's 2,500 employees. As I said, probably 80% of whom are working from home. It's mostly the financial centers. And what we're doing in the financial centers, meaning the bank branches, that might suggest what I would recommend is we're taking it very slowly. There's every employee in there's regular the PPE. We've got the safe distancing. We're doing all the physical distancing and all the other things. And I continue to believe, and I think this is reflected in the plans that the elected officials are trying to establish, that this is a moment of caution, and we should continue in a cautious process. And since we've been able to have the luxury, if you will, of continuing to operate in this mode, with a lot of people still being able to work from home, but still doing our job to serve the public, we'll stay in that mode for a while. And it's just follow the data and let the data drive you in the direction that you need to go. And I think that's what the plans have done so well. And, obviously for any other representative on the call that has the ability to kind of process that kind of interpreted data, that's what you should be doing, and just let the data lead you.
Stephanie, how about you? When should we start Ubering again?
Yeah, I love it. I would say one of the things that's been interesting is that under the emergency powers that the government's had, they've lacked some rules, right, to allow for restaurants, small businesses to be able to operate more efficiently. And I think that there maybe should be a look long term at what some of those red tape or bureaucratic steps maybe don't need to return, maybe should go away altogether. And be something to look at, there. I think one of the examples that I think is interesting is alcohol delivery and pickup. We've seen restaurants be able to, with some of their inventory, be able to take advantage of that. And I just think that's another good example of maybe some bureaucratic red tape that could be looked at.
So how about you? What do you think we should be doing? What advice do you have for the listeners today?
I think a lot of the recovery is about education and confidence. Just the fear of the unknown is crippling, and an exercise or a conversation like this is really helpful. And I just encourage all of you who occupy office space. I mean, I'm talking about my world. Reach out to your landlord, ask what they're doing. If you're not clear, ask how they can provide assistance within your own space. If you've got a strong business improvement district, the bids, the good ones, have been really active. Roslyn in particular has done a great job at helping businesses connect with the right experts and reopen. So I'd say leverage the resources that your community provides, that your owner provides, to deliver as much confidence as possible for those who want to return.
That's great advice. I'm going to break moderator rule 101 and answer my own question, and give everybody a plea. I'm consistently struck by the economic inequality data. I also sit on the United Way board for the National Capital Region. And I'm really worried about the exacerbation of that inequality in our region. And so one thing, I know that a lot of our employees, at least at APCO, we have several hundred in DC, are itching to do something to be helpful, and to pitch in. And there's a lot of opportunities for people to pitch in and volunteer their time and their effort and their money and their other things to help with these inequality issues. And so there are small things, delivering meals to seniors. There are larger things, in terms of volunteerism and engagement, and there's a huge food shortage and emergency. So one thing that I think Cy will build the sort of confidence that you're suggesting, and really get people feeling like they're making a contribution and bringing that spirit back to the region, would be inspiring people to pitch in and help, particularly as inequality becomes more pronounced. So it's just a small appeal for me to everybody, just to try to leverage everything. So maybe we should go to some questions from the crowd. I see we have a few coming in, and we are gonna to lose Larry in a minute. So I'm just seeing quickly if there was anything that specifically was for you, Larry. One of the more interesting ones, Cy, maybe for you, for the open offices. This is from K Swan. How should employees react to offices that will not add higher barriers? Is 6 feet of space really enough for all day? And maybe if I'll pile onto that question, what's happening in terms of the ventilation systems in these buildings? And are you guys doing more? Are your peers in property management doing more to change ventilation and filtration so that 6 feet is really enough for all day, particularly as we get time and people want air conditioning and are going to have those sorts of controls? What's your recommendation and advice around all of that?
Well, some of what we're doing, we brought in consultants to check our air quality throughout every building that we operate. So that was first, just making sure that we had an acceptable baseline. We replaced all of our air filters with MERV 13 filters. So those are some of the things that you could ask your owner whether or not they're doing. We're requiring masks within our office space. Some of this is jurisdictionally mandated, but it might become a little bit murkier when you're in your own office space. So we're requiring our employees to wear masks within the space. And then we're installing foot pedals as an example, where we have doors that can receive them. You can screw on these foot pedals that allow you to just step and pull with your foot to open a door. So we're trying to figure out kind of simple, low-hanging fruit ways of creating a touchless environment, because a lot of what you're describing in terms of air systems, access to elevators that might be touchless, like a destination dispatch, those are huge sums of money, and they're long leads, and so they're not things that we can do day one. So those are some of the things that we're doing day one, and then we're considering a lot of major capital improvements over kind of a 10-year period.
Yeah, and then Larry, before we lose you, Sally Cram had a question. Was there any polling? It was a polling question. The answer sadly is no, but was there any polling about higher education receiving government benefits? So easy one for me to answer, but not very helpful. Since you were involved in a lot of these conversations about benefits and stimulus and all of that, and I don't know what's qualified on different aspects of the CARES Act around higher education. What's your sense of higher ed and the state of higher ed? And there's even conversations now about and college-owned hospitals and how university-owned hospitals and how all that's playing out. What's your sense? I know Bank of America probably has some customers in that space.
Yeah, no, we have some great clients, including right here in our city. And I won't name them all, but we have a particularly special relationship with Howard University Hospital. In fact, we helped Howard University Hospital set up a COVID testing facility over in Ward 7 and covering Ward 7 and Ward 8, free COVID testing, free contract tracing and things like that we helped fund for that. So, the hospitals are obviously functioning. These are low margin businesses as it is. So it's a difficult environment for them. If you remember from the CARES Act, there was a substantial amount of funding that was provided for hospitals. A lot of it went to, university or made available for university hospitals, et cetera. Most probably HHS set up the rules around how that went. And again, it's a very important sector that operate at very tight margins, even in the best of times. So I think the focus on that has been appropriate. There's been discussion about a follow-on set of sort of a CARES 2 or whatever that is, and the House already passed a pretty substantial piece of legislation. We'll see what the Senate does, but I think there's a general agreement that the hospitals and the university hospitals in particular, will continue to need support. They've gotten a lot of support. They've gotten a lot of support in terms of the way that Medicare funding has been advanced so that they can get additional fund liquidity, if you will. So the focus is correct. Obviously, they're playing a critical service in the communities. And what we talked about earlier with the flattening of the curve, it's so that those hospitals can serve the affected population at a level and at a rate that is needed. So it is an appropriate question, and I think all of us, obviously as a lender and as a partner to a lot of university hospitals and to universities more generally, we do think about it. Their big question, of course, will be their return to campus, and that's the thing that they're all wrestling with. And we've seen actually quite an array of different approaches being taken as to whether or not they start in the fall and do they have a truncated semester and all that. And I think that'll have to play itself out. And I will just take a moment to thank you and thank Jack again, but I do regrettably have an early departure. I really want to thank also our colleagues. And I see there's nearly 100 of them on this call. Thank you so much for joining, and terrific discussion from Cy and Stephanie. So thank you very much for including Bank of America, because it's a real privilege to be part of this.
Yeah, thanks, Larry. And your contributions
Larry.
have been really.
Thanks, Larry.
So,
Thank you, guys.
So Stephanie, there's a question for you, Will, from K-Swan also. Will drivers be required to, or somehow will they put things in their cars to separate driver from passenger?
Yep, it's a good question.
Anything on bus drivers doing that or anything else? Because a mask, is that enough for after a whole time?
Sure. Yep. So at this time, we're not requiring it. However, we're not discouraging or, obviously folks setting that up if that's how they, if that's what they want in their personal vehicle. But we, so right now we're shipping the disinfectant wipes, the mask, and other PPE to each drivers and couriers on both sides via mail, and handing it out at Driver Support Center to make sure that we can kind of help supplement if they can't procure their own. So not at this time, it's not a requirement, but also not discouraged if that's what they want to do. And I also typed that in there. Yeah, okay.
Yeah, great. Okay. Cy, question for you from Carol Lofter-Thun. What's been the experience so far of those businesses that have continued to operate, just in terms of employee and safety and some of the things that you've said in your prior comments about just confidence and comfort and having employees, the essential services have been working, and I'm sure many of your buildings, I'm sure, have restaurants and essential businesses, and you've had people that have been working throughout. What's been the difference of experience, and what lessons can we take from people that have been continuing to operate and continuing to show up at work that we can take on board as we start to reopen in non-essential businesses?
What we found, because the essential businesses that have been operating are really at the vanguard of how we all can operate when everybody comes back, and what we found most successful is really detailed team plans. A team, B team, potentially even C and D team, making sure there's real clarity around who can come in, what days, what times. And that the team is always updated, because where there can be conflict is when you have too many people coming in at once, potentially unexpectedly. And then the second is contact tracing, developing some kind of plan, some kind of procedure for your business to contact trace so that you can nip a potential transmission in the bud. Those companies that have come up with procedures like that we don't have a lot of examples at this stage, but those are the best examples.
Great. And I'll make Austin's question about, can you clarify the sample data? Is the DMV more optimistic about returning to the workplace? There is a whole survey. I typed into the chat a link to the repository we have about, but that's national data about returning to the workplace. The one thing I'll say, because we didn't crosstab around the DC area around returning to the workplace, but I'll pick up on Cy's comments about confidence and employee confidence. And I'm sure as you're polling your own employees, as we are, and asking, some are very confident in returning and some are not confident, and it depends what their home situation is, whether caring for young family members or elderly family members, and whether they take public transportation or whether they drive, and or whether they can walk or bike. These kinds of things have a lot to say. as well as whether they work in open space or a closed office and the like. One thing I will say is the significant difference in confidence around employers handling the crisis and dealing with the pandemic has a lot, I think, to say about how optimistic the workforce is in terms of returning to the workplace. If people are confident what their employers are doing, they're going to have more confidence in returning. And just anecdotally, I will say, as we've surveyed our own employees at APCO, they're very confident in our capabilities. I think the questions they have around public transportation and is public transportation, and we are in close conversation with our property manager about what the building is also doing and being very communicative about that. And employees feel very reassured and build that confidence level up that we can have to have the return. And the fact that they're confident in us, I think, makes more of them likely to return to the workplace. Although there's still this question of how you get there. So I'll just talk about that. On the restaurant, there's a restaurant question from Alan. I'm going to butcher his last name, Azagui, I think. Sorry, Alan, if I messed it up. But will DC close street parking in some parts of the city to accommodate outside seating? None of us work for the DC. I'm not sure that we can answer that question. But Si, maybe you're hearing things about in terms of your own workspaces and your restaurant tenants about whether we are seeing examples all over the place of creative uses of outside spaces and closing streets, bicycling or restaurants or other things.
It's a great question because, as most people know, the initial phase, at least, of reopening really only permits outdoor dining, and we don't have a lot of outdoor dining in DC to begin with. So taking over some street parking would be really valuable. There's a kind of a bureaucratic process that we would have to go through. And so generally we're working through our industry associations, through our bids, to try to affect change and kind of bring lots of stakeholders together for that. But that will make a big impact. I'd say most of the restaurants that we've seen that do curbside pickup, some kind of takeout service, they're down to about 20% max of where they were. So they're really struggling. The outdoor dining will help, but you think about the people that you have to hire to operate that sort of arrangement, and it's not a big moneymaker for them. So I think it's an important thing that we do. And I guess it underlies the broader thought that we have to do everything we can to support our retailers and our restaurants, and that's what we're trying to do.
Great, thank you. Question, Stephanie, for you from Lindsay Logendijk. And it's on her question. Her question is, are riders required to wear masks, and are drivers empowered to turn away riders who refuse to wear a mask?
Yes.
My pile-on, as the communications guy who deals with social risk and crisis with a lot of companies, inevitably we're going to have a situation where one of your drivers turns away a rider who is, thinks it's because of a minority, or your passengers is going to get mad at one of your drivers because they think being asked to wear a mask is a violation. How are you preparing to deal with that, and how are you setting policy in terms of how this interaction riders and drivers is going to work in an environment where people are trying to protect themselves and follow cloudy regulatory rules to go place to place, and where the government rules don't necessarily get agreed to by other governments or government officials or people.
It's different city to city.
Yep.
Yes, it is a requirement of riders, and if a driver and of drivers, and if a driver wants to decline a trip because they do not feel safe, because a rider does not want to wear a mask, they will not be penalized financially or be kicked off the app in that case. And so we are monitoring it. We do see, monitor for trends. You think about pickup drop-off trends. If folks don't want to go to a hospital and that's where their trip is, right? We have to monitor to make sure that people aren't picking and choosing, but also, that their health and safety. It's a very, very fine line. But yes, to answer the initial question, it is required of riders and drivers are not penalized.
Great. There are a couple extra questions, but we are at time, and I want to be sensitive to everybody's time. I hope that everyone interesting. I found it fascinating and very helpful for my role in operating our DC office and our business globally. Thank Barry in absentia, to Stephanie, to Sai for your truly insightful comments, and to Jack and his team for putting together the panel with the right kind of diversity and depth of insight that we needed to answer some of these difficult questions. And I got a lot out of it, and so I'm humbled by being asked to moderate, and I hope we did a good job of keeping it moving for everybody. And so thank you for the 100 people who attended, and for my 3 co-panelists, and to Jack and his team. It takes a lot of work to pull these things together, and I know the Board of Trade is working really hard to serve the community and to help enable our recovery, and so I appreciate it. Jack, any thoughts from you before we
just
close?
to say thanks to everyone. Evan, thank you so much. That was a really interesting and great conversation. And Larry, Sai, and Stephanie, thank you so much. We'd love to invite you all back in a couple of months, because I think this is going to be a pretty long road ahead. There's going to be a lot of changes and a lot of learning along the way. So I think it would be really valuable. We're asking a number of folks to come back and keep us apprised of what's happening and what are we learning. So that will be great. Just as a reminder, this will be available on our website that anybody wants to go back and if you missed any parts of it. So we'll have that up and posted. Next week, we're going to be digging a little deeper into some tools that are available to companies and restaurants and others about, how can they just even get started with their reopening efforts. And so take a look for that, and we'll have some conversations with people that are out in the forefront of designing some of those programs. So that should be helpful for folks. And so thank you for taking the time to join us today. Everybody stay well. Thank you again, and have a good day.
Thank you all.
Everybody.
Great. Thanks, everybody.
Bye.